Hey guys, it's Tom with Symbol Surfing, and in today's video, we're going to be taking a look at Cldr again. Basically, I did a video on March 11th on Cldr. It was after the earnings, so definitely check that out. I'm going to link to that in the description, but this video is about an unlikely, hopefully very unlikely scenario where Cldr drops to $10 a share. So it's a big if, but we're going to be talking about the 5-year chart, and that's where I saw something that was very interesting when I was drawing some trend lines, so I want to draw those trend lines for you. Also, I want to compare Cldr to its direct competitors, FSLY and SNOW. And then the third thing I want to do in the video is preview an average down scenario. We're going to get into that as well. So if you like this video though, please click the thumbs up for me, and I'd love to hear your thoughts in the comments. Click subscribe for more straightforward chart analysis like we're going to be doing in this video. And also ring the bell so you get access to the latest videos from Symbol Surfing. All right, disclaimer time. So I am not a financial advisor, and this YouTube channel does not contain any kind of financial advice. Okay, next. People have been asking me, what is Symbol Surfing? Well, Symbol Surfing is a website, a research tool that I actually created and I use on a daily basis to quickly find strong uptrends and solid setups on billion-dollar symbols. And what makes Symbol Surfing unique is the website uses just 4 simple yet powerful chart indicators. And there are no secrets here. It's basically the price, the 50-day moving average, the 200-day moving average, and earnings dates. That combination of indicators is all we use. So they're very intuitive and easy to use. So I just want to show you just a couple of examples here. So this is Disney, and I have like callouts here. If you go to symbolsurfing.com, you'll see what each of these callouts is indicating. And here we have FedEx and Honeywell, and there's many, there's too many here. There's only 5 I'm listing, but there's so many you'll see on Symbol Surfing once you kind of see what to look for. Here's JP Morgan, and the last one's NVIDIA. All right, so definitely check out symbolsurfing.com, and there's more of an explanation, like I said, about what each of these callouts does. Okay, so now Cldr. So Cldr closed at $12.58, up a little bit today, which is great. And let's go right to the 1-year chart. So to draw the trend lines, when you're looking at a symbol on Symbol Surfing, is just click on the image of the chart, and then that enables this drawing feature. So what's interesting is on the 1-year chart, we have a low here, we have a low here, and then we have a low here. So, you know, I would just consider, if we're looking at those 3 lows, you would just draw a connecting line like that, roughly. Whoops, I got a curved line for some reason. That was pretty cool though, but that doesn't help. Okay, so this way, okay, so again, this isn't drawn exactly where I want it, but you'll see it's like, okay, well, we hit a low here at 8. This one's around, I don't know, maybe 9. And then this one is where we're at now at 12. So, you know, it looks like there was such a huge sell-off. It looks like maybe it's consolidating and it's going to go sideways. And also, very interestingly, it's right there at that 200-day moving average, which is even a longer-term moving average. So, you know, 50 days, the 50-day moving average is like almost 2 months, right? Like, you know, 60 days is 2 months, right? So it's a 50-day moving average, but the 200-day moving average, it's like, well, how long is 200 days? Well, 210 days is about 7 months. So it's just under 7 months. So we're looking basically at like a 2-month and 7-month moving average. And these are widely used, but they're long-term moving averages. And we're looking for longer-term solid trends. So, but when the price interacts with one of these moving averages, it can be pivotal basically. So obviously in this situation, it broke through the 50-day, and then we're sitting at this 200-day moving average right now. Okay, so with that being said, it looks like we might be, okay, it's going to hopefully just consolidate here. It's already started to, and we have the 200-day as a support, and we have this trend line. Okay, but hold on. Now let's look at the 5-year chart. So the 5-year chart has this low. And on the 1 year chart, we don't have that low. We're just looking at this low and this low and this low. So on the 5 year chart, it's this is the other low, which isn't featured on the 1 year chart. And that's one of the benefits of using symbol surfing is they're long-term chart views. It's really hard to find anything significant for a 5-day chart or a 1-day chart unless you're day trading. I mean, if you're day trading and you're in front of your computer for hours at a time during the day, that's where you're going to want to use those shorter term moving averages. But if you have like a full-time job or career, you can't be in front of the computer like that, or you don't want to be in front of the computer like that. These longer term moving averages are the way to go. So, and the longer term charts. So this is a 5-year chart. So on the 5-year chart though, so I'm going to draw a couple of lines first. So this is the $12 level, and this is the $10 level. Okay, and then this is the line that I hopefully will draw well for you guys. That gave me an insight that this could drop to $10 a share. So here we go. So it's kind of going to be something like that. So basically, and again, these chart lines are not perfect, but basically here's the low, here's the other low where it was, this line was kind of a support line, and here's another low, and the price right now is at 12 and change, but this $10 level, it was at here, it actually dropped below that, and then even back here it hit this $10 level, and it kind of hung out at this $10 level before it fell. You can see there's a little bit of consolidation along this $10 line. So we're going to talk about this. And by the way, I hope this is informational for you and insightful. And this video might be a little bit longer than my other videos because there's a few things I want to make sure I can communicate. So anyways, and the other thing I want to mention real quick on the chart is if this does drop to $10, you want to be ready. And that's why I want to talk about this average down situation. Because if you bought it at 18 or 19 or whatever, and you thought it was a good value there, well, it would be a great value where it's at now, or even be a better value at $10 a share. I mean, that's what Warren Buffett and several other legendary investors say. Is they say if you bought it at a higher price and nothing significantly changed with the company, you would want to buy more at a lower price. So. All right, so I hope that makes sense. And let's go back to this. So we did draw trend lines on 5-year chart. So we did that. Okay, now I want to compare CLDR with FSLY and SNOW. All right, so here is, now Snowflake is basically, I want to just jump right to the 3-month chart because this one just went public, like I guess in September. So we only have like 6 months of info for it. But now the first thing I want to point out though is the market cap. The market cap is the financial size of the company. And Snowflake, based on the price and the number of outstanding shares, that's what the market cap is based on. Snowflake is basically at 49 billion. Okay. The next one is Fsly. They're at 8 billion. So they're significantly smaller than Snowflake, right? Now, even smaller than that is Cldr. They're at, let's say, 3.6. Let's round up to 4 billion. So 4 billion, let's say, right? So there's a couple ways to look at market cap. You could look at it and say, okay, well, Snowflake, they're the dominant player and they have the lion's share of the market there. So out of these 3 competitors, so you'd want to go with the larger market cap company, right? Another way to look at it is you can say, well, they have a market cap of $49 billion, and maybe that's an opportunity for these smaller competitors to get a larger piece of the pie. So Fastly's at 8 billion and Cldr is at 4 billion. So, and because Cldr is so much smaller, if they double in size, okay, if they go from, 4 billion to 8 billion, what that means is the stock price doubles. It goes from 12 to 24. Or, if it goes to, just another example, if it goes up by 5 times, so I'm trying to do this math in my head, but if it goes up from 4 billion by times 5, that's 20 billion, and it's still 20 billion is still, less than half the size of Snowflake. But if Cloudera goes up 5 times on market cap, then that's going to multiply this price by 5 times. So 5 times 12 is $60 a share. So I'm not saying that's what I think is possible, or I mean anything's possible, but I'm not saying that's what I believe. I'm just giving you examples based on the math. That's all I'm doing. I'm just talking math right now. So anyways, now looking at the 3 months, let's look at the last 3 months. Okay, so Snowflake is down 33% in the last 3 months. That's a lot. And then Fsly is down 29%. So we got down 33%, down 29%, and Cloudera is only down 16% in the last 3 months. So, it's not as bad, right? So I just wanted to point out those a few things. So just talking about the market cap and the last 3 months. Cloudera is down, but it's not down nearly as much as the other two. Okay, so let's go back. So we did the trend lines and we compared Cldr to its direct competitors. Now the last thing I want to do is preview an average down scenario. So, like I was saying, if you bought in at 16, 17, 18, or 19, and it drops to $10 a share, I mean, that's when you kind of need to look at averaging down if you still like the stock. I mean, don't average down if you don't believe the company, you don't believe in the company anymore. But if you still believe in the company and nothing has changed fundamentally, then averaging down can be a really interesting way to go. And it's like, buying the same stock at a discount. So let's go ahead and look at the average down calculator on symbol surfing, and let's get right into it. So I'm going to just preview this real quick. And by the way, I hope you guys are enjoying this. This is a little bit of a longer video here. We're at like a little over 12 minutes. So, but I'm having fun, and I hope you guys are too. So, okay, so the average down calculator, we're going to just use the defaults here for a moment just to get a preview of it. So it's, you put in the number of shares and the price, and the number of shares and the price. So in this scenario, we did 100 shares at 50 and then 100 shares at 10. So this one got really clobbered. It went from 50 down to 10. So this is like a chart representation here. The first purchase at 50, the next purchase at 10, and then this shows the third or the average basically at 200 shares at 30. So we're going to get a little more details in here. So now the first purchase was 100 shares at 50, which is $5,000. The second purchase was 100 shares at 10, which is $1,000. So the total number of shares person has now is 200 shares. The total cost in now the investment is $6,000, which is $5,000 plus $1,000, right? Okay, so the old cost basis, when you just had 100 shares at 50, or is 50, right? No news there. But when you have this new cost basis, because the person averaged down, their new cost basis is $30 a share. So that's what that's about right there. Now this is really important too. So basically, what this talks about is if the stock price recovers to the first purchase price of 50, the total of the value of the investment will be $10,000, and from your initial 2 purchases, which was only $6,000. So that would be a gain of $4,000, or 66%. So that's the power of it. If it just goes back to your original purchase price. Now, if the price goes higher, which is what you thought it would do from your first purchase price, then you're going to have an even bigger gain. So, all right, let's go back and let's say, we bought at 18, and then let's say we bought another at 10. Let's, in this scenario, hopefully it doesn't get to 10, but if it does, you'll have this video to reference, and you can obviously use this on it's a channel on symbol surfing. Okay, so just confirming, we're doing a scenario of 100 shares at 18, 100 shares at 10. So here's this graph. Okay, so I'm going to go through this a little bit quicker here. So we got the first purchase was 100 shares at 18, which is $1,800. Second purchase, 100 shares at 10,000. Okay, so basically this is the new cost base. So we went from $18 a share to $14 a share. And this is where it kind of gets interesting is if the price recovers back up to that $18 a share, the value of the investment will be $3,600 from an investment of $2,800. So you'd have a gain of $800 or 28%. So it's really powerful. And that's just if it gets back to where you initially purchased at 18. And then if you want to be more aggressive, you can buy, let's say, 200 shares at 10 if this happens, if it goes down to 10. So then you get even a bigger returns over here because you've lowered the cost basis even more. So you have a total of 300 shares. So then if it goes back to 18, you'll be at 5,400 from 3,800. So you have a $1,600 profit or a 42% return. So anyways, I hope this has been helpful. Basically, so we did the trend lines, we compared, and then we did a preview of an average down scenario. So let me check that off. All right. So if you like this video, please click the thumbs up for me. And I'd love to hear your thoughts in the comments. Remember to click subscribe for more straightforward chart analysis like this, and then ring the bell so you get access to our latest videos from Symbol Surfing. Thanks again for watching.